2-minute YouTube podcast market, script hey investors, and market watchers. Let's dive straight into today's highlights. The Trump administration has made headlines by imposing hefty 50% duties on more than 400 new product categories covering steel, aluminum, car parts, plastics, and specialty chemicals. This move is rattling global supply chains and will have ripple effects across sectors. On the Indian front, today's focus is split between the U.S. Federal Reserve minutes, new GST reform discussions led by the finance minister, and a busy corporate calendar including DLF, SBFC, Canara Bank, Ashok Leyland, and Patam. GIFT Nifty is pointing to a slightly negative open, down by 0.2%. The equity outlook is cautious. Global cues are weak after U.S. stocks dropped 1.5% on tech sector declines. In Asia, major indices are sharply lower. Japan's market fell over 2%. Positive news comes for the Indian auto sector. With GST cuts expected to spur demand and boost sales, in textiles, duty on cotton imports has been eliminated, opening the door for much-needed margin relief. Metals could be volatile as the U.S. tariffs shake up the aluminum and steel markets. Rail stocks look interesting with their value improving after a recent correction and increasing. Government investments. Public sector bank stocks remain strong after solid quarterly results. And there's a buzz in telecom. Reliance Jio axed its lowest data plans, signaling tariff hikes could arrive within 6 months. European markets, surprisingly, are up, thanks to optimism from progress on Ukraine-Russia peace talks. Germany's and France's indices rose, mirroring hopes of a major summit between Vladimir Putin and Vladimir Zelensky. Gold is steady around $33.15 per ounce as traders wait for cues from the Federal Reserve. Brent crude slipped to $66 per barrel, reflecting the shifting geopolitical winds. That's all for today. Stay tuned, manage your risk, and let the data guide your trades.